Most traders literally spend months learning unnecessary stuff when they come into trading. When I say unnecessary stuff, I basically mean spending so many hours learning about unnecessary indicators, drawing unnecessary trend lines that they have no idea about how the market even plays, buying so many unnecessary forex trading courses. But at the end of the day, they are still unable to read chart, which is the most basic thing that every single trader needs to know. But luckily for you, you are watching this video on Perez Trade's official YouTube channel. And that's why by the end of this video, you should be able to read the most important candlestick patterns that the market actually creates every single minute, every single day, every single second. And in this video, I'm going to share with you 5 of the most important candlestick patterns that you need to know as a trader if you really want to become profitable. And by the end of this video, you should be able to not just know them, but be able to implement them in the real market as well. So guys, the first candle on our list is basically the Doji. Now this one looks like a plus or a cross sign. So take a look at it here. You can see here is the particular candle we are referring to as Doji here. It has a very tiny top and then a very smallish body and then another tiny lower down as well. Now this candle is referred to as a Doji because the opening price and then the closing price are almost the same. Like you can see here, right? And you can see that when we talk of the opening price, is basically the last part of the candle, not the wick, but the body side of the candle. Like for example, you can see that this particular one opened here. You can see this is the opening price. This is a bullish candle, so it opened lower. You can see it opened here and then closed right here. Now you can see that between the body and between the opening and the closing of the body is very low, not even up to a decent amount of pip. So this sort of candle is considered a Doji. Now that you've seen what a Doji actually looks like, now I believe the next question in your head right now is basically, so what exactly is this tiny candle meant for? Like, what power exactly does this tiny candle hold? Now here is it. This Doji candle on its own really doesn't have any power, but when you spot this Doji candle at an entrance, then it means a lot. Now first of all, let me tell you one thing you need to know about this candle. This candle is known as the indecisive candle or the indecision candle. Now what this basically means is simply the reason why you can see that the body, the opening price and the closing price is very close is basically because buyers and sellers were actively fighting at that point of the market to decide the market direction. You see, so there was a serious battle going on there. And when you see the body tiny like this, look at the part with the longest wick. Those people actually won on paper, but you don't have to keep it in your mind that way. But just know that the Doji is an indecisive candle. On its own, it has no power. But when you see the Doji in a trending market, then it becomes really powerful. Now let me show you a typical example on my chart right now using the Doji in a trending market. Now let me reset back. Now you can see here is a Doji here, very tiny in between here. Now take a look at the market direction. You can see originally this market was a downtrend. As you can see, it was breaking levels from this point. Now let me just get it. You can see it was breaking levels from here, going downwards. From here, you can see it was breaking levels downwards. But the moment it got here and went back a bit and then came back down and created the Doji. If you notice one thing is simply the market switched from a downtrend to an uptrend immediately. Now this is the power of a Doji. If the market is trending downwards, maybe the market is trading downwards, like you can actually see here right now. Let me say the market is trading downwards like this. Like this, the market is trading downwards like this, and then you spot a Doji. There is a 60 to 70% chance that the market is about to switch direction to the upside. Now this is a very important concept that you need to have in your head for those of you who will be trading trend. In case you see the market trending to a particular direction and then it suddenly prints a sort of funny Doji, then you need to be very careful trading into that direction of the trend. You need to wait for multiple confirmation before you take trade from that point. So guys, this is basically the whole idea of a Doji. A Doji is just a very tiny candle that looks like a plus sign, a very long tiny wick at the top, tiny wick at the down, and a very smallish body, which means that both buyers and sellers actually came to an agreement at a very narrow difference, and it really doesn't make much difference in the market. But when you spot it in a trending market, it's a sign that the market is about to reverse. The next candle on our list, which is known as the hammer candle, which is another very powerful candle that you need to understand. So guys, now before we get to the remaining 4 of the candlestick patterns, which are very important and valuable to you as a trader. I also want to let you know that this video is actually brought to you by Light Finance. Now, Light Finance is a very reliable trading broker out there, a very reliable forex broker that is sure to deliver you whatever result that you want in the forex market. Now, they have fast trade execution and they have over 600 pairs plus that you can actually trade, and they have a very good leverage, and every single thing is very good. Now, if you're a trader without experience but then you still want to make money, well, you can actually make money through their copy trading system, whereby you actually copy other profitable traders on the platform without you having to do any analytics. All you need to do is simply create your account using the link available in the video description, fund your account to as low as $10, and then start copying other traders on the end. Now, for those of you who are into short-term trading, who are into all the short-term time, so you can actually try out Stockity. It's a very reliable platform that you can also use as well. For those of you who are into this short 30 seconds 1 minute sort of trade, well, Stockity is actually here to help you. It's an option-based trading platform and not a full-blown forex trading platform. So guys, talking of the hammer, now as the name implies, a hammer, a very small, a very little top and then a bigger down. Like, here's what I mean. Take a look at this particular candlestick here. Now, this is what we call the hammer candlestick. Now, what basically happens during the formation of this candle is simple. Sellers actually push the market downwards, but then buyers comes in and then overtakes them. Which means that what? There were a group of people that tried selling the market and they're pushing it way lower. But then the people who came in and came to push it upwards actually overpowered them. So maybe people who were trying to push it down with maybe about $1 billion, and then people with over $5 billion actually came in and they sent in the other direction, so they won. Now, in the process of them actually winning, that is when the hammer candlestick is actually formed. Now, this hammer candlestick is most of the times formed from a downtrend that is actually switching into an uptrend. So take a look at this one here. You can see the hammer got formed here. Now, after the hammer got formed, what next came? You can see how the market then created this indecisive candle. Now, after this indecisive candle, what came next? There you got a very bullish candle. Now, the more this bullish candle got formed, assuming this was a point of a clear support level, what you basically do from here is simply you place your entry at the close of this candle, your stop loss a bit below the wick of this hammer candlestick, and then you just target a 1:2, as simple as that, and you would have gotten it after a short period of wait actually. So basically, this is all you need to know about the hammer candlestick. Now, let's get down to the third candlestick on our list, which is known as the shooting star. Now, the shooting star candlestick looks like the hammer candlestick, but the difference is simple. The hammer candlestick form at a downtrend that is switching into an uptrend. Meanwhile, the shooting star form at an uptrend that is switching into a downtrend. Now, you see this black candlestick here. This is what is known as the shooting star. Now, the shooting star has a very tiny body at the top and then has a bit more built on the down. Now, this tiny top you see is often called the wick. Now, I'm calling it a tiny top in this video because just trying to make it easier for you guys to understand and not bring in some technical words to confuse you. But basically, this tiny side you see is known as the wick. And then you see this full built side is what is known as the body. I'm just calling the tiny body so that what you can just have an idea of what I'm actually referring to. So now, whenever I see this shooting star, it basically says one thing: the market is about to switch from a downside, from an upside to a downside. Like, for example, when we're talking about the hammer candlestick, we stated it clearly that when the market is trading downwards and I see the hammer candlestick, then you should be trying to look out for buying opportunities, right? Exactly, same thing happens with the shooting star. Now, when you see the shooting star, it often happens at the top of the market. So whenever I see the shooting star, then you look out for a selling opportunity. So guys, the fourth candlestick on our list is basically known as the engulfing candlestick. Now, what is the engulfing candlestick? Now, the engulfing candlestick is basically a form of candlestick whereby an opposite candle actually comes to swallow a smaller candle from the opposite direction. Now, let me make it easier for you. Now, take a look at this part of the market right now. Let me mark it out for you. Take a look at this right now. Now, you can see this black candle versus this bullish candle. Now, this is what's known as the bullish engulfing candlestick. Now, you can see how this black candle here is very small and then this big blue candle actually came and then shield it off. Now when you see a small candle like this and then a big one follows it like this, it basically means that what this is an engulfing candlestick. Now when it comes to determine the main market momentum between a shift from a downside to an upside, the engulfing candlestick, the bullish engulfing candlestick, is one of the most reliable candlestick out there that actually gives more room, because it doesn't just tell you that what buyers and sellers competed for the position, but it tells you that what buyers came in and then they kicked the sellers off, because the sellers actually created a bearish candle and then buyers came in immediately and then just shut it down with a big bullish candle immediately. Now the engulfing candlestick happens on both sides, both the buy and sell side. Now over here as well, you can see this is a bearish engulfing situation. This is a bullish candle being created, then the bears also came in and I created this big bearish engulfing candlestick to also shield it out, which indicates that what there's a selling momentum. So you can see this one here shows there is a selling momentum, and then this one here actually shows there is a buying momentum. So now guys, the fifth candle on our list is actually known as the morning star. Now the morning star candlestick is also a very key reversal pattern candlestick. Now let me just show it to you. Now what is it? For every other candle that I've talked about so far, they are all single candles, but when it comes to the morning star, it's actually a 3 candle pattern. Now here is what it actually looks like. Take a look at this area here. Let me zoom it out for you. Now take a look at this 3 candle here. You can see a morning star is actually formed after the market creates 3 inline candles like. Now first of all, it prints a very big bearish candle. Now after picking this very big bearish candle in a downtrend, the next thing is basically you wait for it to create a very tiny candle. Most of the times it's a doji, like the one you can see here. You can see this a doji. Now once you create this doji, right now you have what? You have a doji here, which is an indecisive candle. Now after I create this indecisive candle, now it must not be an indecisive candle always. In some situation, it could be another small bearish candle, another small bullish candle. Now all of these possibilities are actually possible. Now either of them that is great, it doesn't really matter. You just need to make sure that what you have a candle in between here that is smaller than the previous bearish candle. Now once you have this particular candle here, then the next is simply you look out for a big bearish candle. Now this big bearish candle should at least cover up to 50% of this first candle here. So you see this bearish candle should be able to take at least up to this level of the previous bearish candle, which is it should be able to take this candle up to this level. Now if it's able to take it up to this level, then it indicates that what the market has switched from a downtrend to a uptrend, which means that what the buyers are actually stepping into the market already. Now take a look at this market here. You are going to notice 2 things here. Number one, the market did not just form a morning star. During the process of forming this morning star, the market also creates what we call the engulfing candlestick, which is a bullish candle that is engulfing a bearish candle. Now in this situation of the candles we have here, this is a full engulfing morning star. You can see the bullish candle is not just bigger than this bearish candle, it's also bigger than the previous bearish candle itself. Now when you see this sort of momentum, it means that what buyers are really in. Now the bigger this bullish candle here, the more probability of this market actually buying to the direction that you've actually seen. So guys, these are my 5 favorite candlestick shaped or patterns that I will actually advise every single beginner needs to know and actually learn how to trade with. If you know all of this, then you are almost there. Now as I said earlier, and I will keep saying, don't trade these candlesticks in isolation. Always mix them with your strategy that you are trading, whether you are trading supply and demand, ICT method, support and resistance. Just make sure that what you are mixing it with this particular strategy. Don't trade it in isolation. As I repeat, don't trade it in isolation. Always mix it up with a different strategy. Now if you want me to make a price action video where I'm actually trading with this strategy and then mixing up this candlestick pattern with my usual trading strategy to actually take up my trades and manage my trades, then let me know that in the comment section and I'm going to make a custom video for it as well. So guys, with this said, hope to see you in my next video. Don't forget to drop a comment, like, and subscribe as well.